If your Social Security check looks smaller than you expected in 2026, do not assume the money is simply gone. There are several 2026 rules that can reduce what actually reaches your bank account, and one of the most important numbers you need to understand is $1,570. But here is the part most people miss. $1,570 is not a universal Social Security payment. And there is no automatic government program that simply sends every senior a missing $1,570 check. Your actual amount depends on your benefit, Medicare premiums, taxes, income, work status, and other circumstances. So today, we're going to break down 3 rules that can quietly affect your payment, explain where deductions can come from, and show you exactly how to check whether your money is being reduced correctly or whether you may need to take action. The first thing you need to understand is that your Social Security benefit and the amount that actually lands in your bank account are not always the same number. The Social Security Administration calculates your benefit, but certain amounts can be withheld or deducted before the payment reaches you. In 2026, Social Security benefits received a 2.8% cost of living adjustment, with the increase beginning with benefits payable in January 2026. That means millions of Americans saw their gross benefit increase. But a higher gross benefit does not necessarily mean a larger amount deposited into your checking account. This is where the first rule becomes extremely important. Rule number 1: Medicare can reduce the amount that actually reaches your bank account. For many retirees, Medicare is one of the biggest reasons their Social Security deposit does not match the benefit amount they see on their Social Security notice. In 2026, the standard Medicare Part B premium is $202.90 per month, although people with higher incomes can pay considerably more because of income-related adjustments. Think about what that means. Suppose your Social Security benefit increased because of the 2026 COLA. You might look at your new benefit amount and expect the entire increase to appear in your bank account. But if your Medicare premium is deducted from Social Security, the deposit you actually see can be lower than your gross benefit. And if you are subject to an income-related Medicare adjustment, the deduction can be substantially higher. The Social Security Administration's 2026 Medicare information shows that the standard Part B premium is $202.90, but higher income beneficiaries can pay additional amounts. For individuals with modified adjusted gross income above $109,000, and married couples filing jointly above $218,000, the Part B premium can increase depending on income. That means if your Social Security check appears smaller than expected, one of the first things you should investigate is the Medicare deduction. And here's something many people overlook: the income used for Medicare's income-related adjustment can be based on tax information from an earlier year. So your current financial situation may feel very different from the income figure being used to determine your Medicare premium. If your income has dropped because you retired, lost work, experienced a reduction in pension income, or had another qualifying life-changing event, there may be a process for requesting a reduction in your income-related adjustment. The Social Security Administration specifically says that people whose income has gone down may use Form SSA 44 to request a reduction in their income-related monthly adjustment amount. So don't simply look at the bottom-line deposit and assume the missing money is unexplained. Pull up your benefit information and look at the deductions. Now let's move to the second rule, and this one can be especially important if you are receiving Social Security while still working. Rule number 2: the 2026 earnings test can temporarily withhold part of your benefits. If you are younger than full retirement age and you're receiving Social Security retirement benefits while continuing to work, your earnings can affect how much Social Security you receive. For 2026, if you are under full retirement age for the entire year, the annual earnings limit is $24,480. Social Security says it deducts $1 in benefits for every $2 earned above that limit. This is not a permanent cancellation of your Social Security benefit. It is a withholding mechanism under the retirement earnings test. But if you don't understand the rule, your smaller checks can look like an error. For example, imagine someone starts collecting Social Security before reaching full retirement age and continues working. Their salary pushes their earnings above the applicable 2026 limit. Social Security can withhold benefits based on the amount of earnings above the limit. That means the person's monthly deposit may suddenly be smaller, or some payments may be withheld. And there is another important number for people who reach full retirement age during 2026. In the year you reach full retirement age, the 2026 earnings limit is $65,160, and Social Security deducts $1 in benefits for every $3 earned above that amount, but only earnings received before the month you reach full retirement age count under that test. Then comes the part many working seniors need to remember: once you reach full retirement age, the retirement earnings test no longer reduces your benefits based on how much you earn from work. The Social Security Administration explicitly states that beginning with the month you reach full retirement age, there is no earnings test reduction regardless of how much you earn. So if you're working while receiving Social Security, don't panic when you see a reduction. Instead, determine which earnings test rule applies to your age and situation. And there's another reason to pay attention. Social Security does not necessarily treat every dollar that comes into your household as earnings for this particular test. The retirement earnings test focuses on work earnings, so pensions, investments, and other types of income are treated differently from wages and self-employment earnings. That's why your personal situation matters. Now we come to the third rule, and this is one that can affect people who have higher incomes even after they retire. Rule number 3, taxes and income-related adjustments can reduce what you keep. A lot of people assume Social Security benefits are automatically tax-free because they earn those benefits through years of payroll taxes. Unfortunately, that is not always how federal taxation works. Depending on your combined income and filing situation, some portion of your Social Security benefits may be subject to federal income tax. And this becomes particularly important when you have Social Security income combined with wages, pensions, withdrawals from retirement accounts, interest, dividends, or other taxable income. That means you can have a perfectly legitimate Social Security benefit amount, receive your normal COLA increase, and still end up with less money available after taxes and other deductions. There is another important connection here: higher income can also affect Medicare premiums through the income-related monthly adjustment amount. The 2026 SSA Medicare tables show that higher income beneficiaries can pay additional Part B and Part D amounts. So one financial decision can potentially have multiple effects. For example, imagine a retiree takes a large taxable withdrawal from a retirement account. That additional income may affect their overall tax situation and can also be relevant to Medicare's income-related premium calculation. The result can be a smaller amount of disposable income even though the Social Security benefit itself did not suddenly disappear. This is why looking only at your Social Security deposit is not enough. You need to understand what is being withheld, why it is being withheld, and whether the information used to calculate that amount is still accurate. Now let's address the $1,570 in this video's title, because this is where we need to be extremely clear. There is no single 2026 Social Security rule that says every senior is entitled to a missing $1,570 check. The Social Security Administration's official 2026 data shows that average monthly benefits vary by category. For example, the estimated average monthly benefit for all retired workers in January 2026 is $2,071, while the estimated average for an aged widow or widower alone is $1,919. Average benefits for disabled workers are different again. So if you've seen a headline claiming that everyone is owed exactly $1,570, be careful. Your actual Social Security benefit is based on your individual earnings record and claiming history. The SSA says your benefits estimate is based on your work earnings and when you apply, and your personal Social Security account can show estimates based on your earnings record. The important question isn't, where is everyone's $1,570? The important question is, does my individual Social Security record show that I am receiving the correct amount? That is a much more useful question. And this brings us to the most important part of the video: what you should actually do if you believe your check is missing money. First, check your Social Security account and review your current benefit information. Compare the benefit amount shown in your records with the amount actually deposited into your bank account. Second, look at your Medicare deductions. If you have Medicare Part B deducted from Social Security, make sure you understand exactly how much is being withheld. In 2026, the standard Part B premium is $202.90, but your amount could be higher depending on your income. Third, if you are still working and haven't reached full retirement age, look at your earnings for 2026. If your wages or self-employment income are above the applicable earnings test limit, that could explain why some benefits are being withheld. Remember the 2026 limits: $24,480 for people under full retirement age throughout the year and $65,160 for people reaching full retirement age during 2026, with different withholding formulas. Fourth, look at your federal tax situation. If you have other sources of income, don't assume that your Social Security benefit is the only number that matters. Your total income picture can affect how much of your benefit is taxable and can also affect Medicare-related premiums. Fifth, if your income has fallen significantly but your Medicare premium is still based on a higher income year, investigate whether you qualify to request a reduction in your income-related adjustment. The SSA specifically provides Form SSA 44 for people whose income has gone down because of certain life-changing events. And sixth, don't rely on a viral post, a social media graphic, or a YouTube comment to determine whether you're owed money. Your Social Security record is personal. Two people living next door to each other can have completely different benefits because their earnings histories, claiming ages, Medicare situations, tax situations, and family circumstances are different. There is also an important point about the 2026 COLA. Social Security benefits increased by 2.8% in 2026. If you expected a much larger increase, remember that a COLA is a percentage increase applied to your existing benefit. It does not mean every person receives the same dollar amount. For example, someone receiving $1,500 before the COLA and someone receiving $2,500 before the COLA will not receive the same dollar increase. The percentage is the same, but the dollar amount is different. And that is exactly why your own benefit statement matters more than a headline number. Now, if you believe your payment is genuinely wrong, gather your documents before contacting Social Security. Have your benefit notice available. Have your bank deposit records available. Have your Medicare premium information available. If you're working, have your recent earnings information available. And if you believe your income has changed enough to affect Medicare premiums, gather the appropriate tax documentation and information about the life-changing event. Then contact Social Security through its official channels and ask for an explanation of the specific amount being withheld or deducted. Don't simply say, "My check is short." Ask, what is the gross benefit amount? What deductions or withholdings are being applied? And what is my net payment? That question forces you to separate the three numbers: your gross benefit, your deductions or withholdings, and your final deposit. Once you see those three numbers, the mystery becomes much easier to solve. So let's recap the three rules. Rule number 1, Medicare premiums can reduce your Social Security deposit. The standard Part B premium is $202.90 in 2026, with higher amounts for some beneficiaries based on income. Rule number 2, if you're receiving Social Security before full retirement age while working, the retirement earnings test can cause benefits to be withheld when your earnings exceed the applicable 2026 limit. Rule number 3, taxes and income-related adjustments can affect how much of your Social Security money you ultimately keep. Your Social Security benefit doesn't exist in isolation from the rest of your financial picture. And the $1,570 mentioned in the headline should be treated as a figure to investigate, not a guaranteed payment owed to every beneficiary. The official SSA data confirms that Social Security benefits vary significantly between individuals and benefit categories. The real goal here is not to convince you that the government is secretly taking a fixed $1,570 from every senior. The goal is to make sure you understand why your own check may be different from what you expected. Because if you don't know what is being deducted, you can't challenge an incorrect amount. If you do know what is being deducted, you can determine whether it is legitimate. And if your circumstances have changed, you may be able to take steps to have the calculation reviewed. So before you assume your 2026 Social Security check is simply smaller because of some mysterious new rule, check the numbers. Look at your Medicare deduction. Check your work income if you're still employed. Review your tax situation. Compare your deposit with your official Social Security benefit information. And if something doesn't make sense, ask Social Security to explain exactly where the difference comes from. Your Social Security benefit is based on your individual record, and understanding that record is the first step toward making sure you're receiving everything you're actually entitled to. If this video helped you understand what may be reducing your 2026 check, share it with a parent, spouse, friend, or neighbor who receives Social Security, and subscribe for more straightforward updates about Social Security, Medicare, taxes, retirement, and the rules that can affect the money seniors depend on every month.